Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew and with me is Cheryl D'Souza. We'll take you through the next 1 hour or so of trade. Let's, in fact, look at what is happening in the markets right now. We've got a weak start with the benchmark indices losing about 1% or so in the early few minutes. And since then, we've recouped some of those losses. So as of now, the Nifty50 trading with cuts of about 0.5% or thereabouts. A few concerns are front and center. First of all, of course, you have the COVID-19 pandemic, where over the weekend you had the fresh number of infections coming in at close to 4 lakh. It's lower today, 3.68 lakh, but that still remains elevated, and we'll have to see a consistent fall in the number of cases for that issue to be sort of passed through. You have the results of the assembly elections where the BJP-led NDA failed to win in West Bengal. That was seen as a bit of a negative. Of course, they have increased their share, so perhaps there is a silver lining for those who were anticipating a win. Reliance Industries, well, it's trading a little weak. We'll be discussing that in more detail on the show, and that's pulling the benchmarks lower. And of course, foreign institutional investors have been consistent sellers in the recent past. On Friday, they sold as much as 3,500 crore rupees in the equity markets on a net basis. Cheryl, what are the key movers and shakers in trade today?
Most of the movers, Alex, are actually based on the earnings report. So definitely you have Reliance Industries that is in focus. Apart from that, you have Yes Bank that is declining in trade on back of their dismal Q4 earnings. The lender has actually posted a loss in Q4 versus a profit a year ago. This is on back of higher loan loss provisions as well as lower interest income. Apart from that, you have Indian Hotels, also similar case coming in for Indian Hotels. They've also posted a loss in Q4 compared to a profit a year ago. You have Marico, that particular counter is actually surging in today's trading session. The management has said the inflationary pressures are reducing, so sequentially they could see margins improve going ahead. Also, they're positive about maintaining their mid-term growth goals as well. You have Natco Pharma, that particular counter is buzzing in trade as they've got the emergency use approval for a tablet that will be used in treatment of COVID-19. So on back of that news, you have Natco Pharma that is in focus. Ashok Leyland is the other counter that is in focus because they've also said that they're scaling down the operations in the month of May. So apart from that, the rest of the stocks that you can see on your screen, Lotus Labs on earnings, IndusInd Bank also on earnings. But Reliance Industries is a stock that is in focus today. It's down in trade, dragging the benchmark indices, as Ajay said. Also, it's a mixed bag of earnings coming in for Reliance Industries for Q4. But what are the brokerages saying about the counter? Ajay is here with a wrap of that. Ajay?
Well, there's a mixed kind of reaction coming in from the brokerage community as far as the fourth quarter results of Reliance is concerned. Nomura says that O2C was actually strong and so was retail. Jio did not really made up to the mark according to them. Macquarie goes on to say that there is a risk to, downside risk to the overall earning estimates given the way second wave could actually impact their retail end of the business and Jio. Jefferies also kind of comes out with a very cautious kind of undertone. If you look at the numbers, O2C did the bulk of the heavy lifting this particular quarter. Retail was very good but is susceptible to operations getting hit because of COVID second wave, and a lot of states actually going through stricter norms, and retail is a business which does get impacted. Jio too, ARPU of course came under pressure on expected lines, and it was made up to a large extent by the net addition on the subscriber front, but EBITDA was on the lower side. So all these three have to come together in a major fashion in the second half, which some of the brokerages are saying, like Motilal, and they believe that in the second half of the year onward there could be a good earnings upgrade cycle, but there are a lot of caveats to it. The biggest caveat of course is that the cycle on the chemical side should favor them, and also the COVID second wave should not be very meaningful, and after a slew of stricter norms, things should start normalizing. But net the tilt is that the quarter was mixed to inline, but at the same time most of them would like to believe that going forward the earnings cycle is coming on track after a very long time, and all the three ends of the business will start contributing together, and between 21 to 23 there could be a very meaningful 40 to 50% improvement in their overall earnings.
All right, thanks so much for that, Ajay. Now, this is going to be an interesting conversation because there's so much to talk about with regard to Reliance Industries. What business do you focus on? But let me get my guests in. We've got Kunal Bothra and we've also got Ashish Maheshwari. Both of them are going to start off by talking about Reliance Industries. Kunal, I'm going to come to you first. From what I see on the charts, it's trading lower than all of its simple moving averages, including its 200-day moving average. And it's looking at quite a bit weak as of now, 2% lower on the charts today. At what point would you say that it's a buying opportunity? On the fundamentals, at least, most of the brokerages say that it is a strong buy.
So good morning, Alex. I think it's going to be interesting because Reliance Industries and the wait for the Reliance Industries to break out of that range is still awaited by many market participants. But the charts are a bit in a flux, I would still say. The stock is not showing any signs of revival as such. It's more pinned towards hope rather than more of concrete data points which could probably suggest that the stock is ready for any kind of a trend, whether it's an upside trend or whether it's a downside trend. Now, if you look at the charts for Reliance Industries, which I'd shared, the stock in last 6 months, I think from October highs or September highs or October start, the stock had gone through a downward drift. It's formed a consolidation pattern. Now, in that pattern, apparently, that 2,200. So, as you can see on the stock on the charts as well, look at those two critical aspects of the charts. One of them is in terms of prices, where the prices are consolidating, and it's very clearly seen in the kind of band or the narrowing of the band for Reliance Industries. And very, very importantly, if you look at the lower grid, it's a drop in volume. So you can look at the volumes which have dropped significantly on a week-on-week basis for Reliance Industries. So that itself tells you that the participation level has dropped. The stock has to break past about the upper blue trend line or the lower support trend line to really kickstart any kind of a trend. Otherwise, I think it could remain in this narrow band and the range can keep on getting a bit narrow for Reliance Industries. So I think it's a much, I would say, inline reaction from the markets that the stock is not doing too much post-result as well. Only a breakout of that upper end trend line, which is I think 2,200 levels for Reliance Industries, could really kickstart a very strong uptrend for itself.
All right. Good morning, Ashish. Let's get your views on Reliance Industries and the earnings, and how do you see the way forward coming in for this particular counter? Definitely putting pressure in today's trading session. But how are you seeing this particular counter fare going ahead?
Yeah. First of all, if we see numbers wise, disappointment as such, because the numbers are in line with the expectations only. O2C business, the kind of EBITDA margins they have shown is again good because the petchem prices are really skyrocketed in last quarter. So they are going to get the full benefit of this. Besides this, 45% growth in retail and telecom is again good growth in my view. So I'm saying that they are going to do a CAGR of around 30% PAT in next 3 years. This momentum will continue. Only a couple of things, like Ajay was also sharing, saying that because of the lockdown, the demand in retail, telecom, and chemicals might slow down partly. So this is the thing that market is now taking count of this, and we are seeing some correction in the stock price. But if you ask me, if you are having at least 3 months time horizon, you can start accumulating stock once again. I see a price target of 2,100 in next 3 to 4 months once the fear of COVID, etc., slightly comes down.
I want to delve a little bit more into that, Ashish, and if you can sort of lay out before us what your expectations are from which business out of these prominent businesses is going to really pull most of the weight going forward, right? So you have the telecom business that is clearly in a sense, expected to benefit from the fact that now you have largely two players in the market, and you hopefully will see ARPUs going up for Reliance Industries, right? What are the pushes and pulls for this business as well as for retail that an individual investor would need to pay attention to?
Yes, if you see, actually, telecom space, although this quarter the ARP has come down to 138, but this fine in a way that the broadband is also gaining a lot of acceptance. Their plan of 399 rupees unlimited data is really doing good. Even if it's in my building where I stay, almost 50% people have shifted to Reliance Jio network now. So broadband will continue to drive growth in Jio platform as such. As far as retail is concerned, again, Jio Mart app is doing pretty well, and the kind of offers, etc., they are giving, they're quite punctual in deliveries, etc. So that will also continue to maintain momentum in my view. Only thing is that stores are storefront, or that is offline retail, will face some heat because they are having now 12,000 plus stores, and not all of them are working, looking at the lockdown scenario pan India. So this is something which will take slightly hit. But at the same time, in the O2C businesses, I'm quite bullish that momentum will continue because this time lockdown is not full lockdown, this part lockdown. So demand is going to be there. So I'm not that bearish on Reliance Industries. In my view, they will continue to do well. It's a matter of some days only.
All right, not bearish on Reliance Industries is the word coming in from Ashish, also saying that he's bullish that the momentum will continue for the OTC business going ahead for Reliance Industries. All right, that's the take coming in from both of our experts on Reliance Industries. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will get you the high risk and low risk ideas as well as answer your viewer queries live. So don't go anywhere, stay tuned.
Welcome and welcome back. We are now heading into the high risk and low risk ideas that our experts have ready for you. I'm going to go across to Kunal first. Kunal, what have you picked for us today?
Well, it's specific towards just a certain set of stocks, more of stocks specific. Based on the first one I picked up is upon SH Kelkar. SHK is the script code on NSE. Looks very attractive because the stock is confirming a breakout on more of the monthly charts. So suggest the buy on SHK for a target of approximately 160, which is approximately 10% higher from current levels. Stop loss to be kept at 140. And the second is what I would recommend as a sell. I think looking at the market structure and the weakness since last 2 days, it's prudent to have a mixed kind of a trading setup. So one sell call, that's on Bandhan Bank. The stock clearly showing signs of weakness and being unable to bounce back, even the last 1 week of the market recovery. So sell with a target of 300 approximately and stop loss at 330.
All right, that's the ideas coming in from Kunal. Ashish, good. Ashish, what are your queries for the viewers? What are your high risk and low risk ideas for the viewers? I stand corrected.
Yeah, my high risk idea is going to be Morepen Lab. They are coming out with numbers tomorrow. I'm expecting their sales will simply double from here, and net profit will also go up at least by 300% in this quarter. Another trigger is as they are getting $100 million investment from a Swiss company for their further expansion. This will also take the stock to new high. Again, if we see the business profile wise, they are generating around 62% revenue from API, and there they have done a capex of around 180 crores already. So the result will also start coming in this financial year. And their home business, the diagnostic business, is just booming because now everybody want a blood pressure monitor, glucometer, thermometer, everything earlier which was not necessity. Now you are going to have this, and they are the leader in this segment. So Morepen is my pick number one. Next pick is low risk, low return is Steel Authority of India. Again, this is a company where I'm expecting last year they made a profit of 2,000 crore in full year. Just quarter profit only will be 3,000 crore, and the way steel prices are going up. In my view, this is most underrated stock, and now you are going to see a vertical run up in sale. So my target for sale in next 3 months is around 150, and 6 months 175.
Well, interesting calls there, Ashish. In fact, you may already have answered a few of our viewer queries. Speaking of which, let's go across to the first one. And I know a lot of you have tuned in on YouTube. We'll come to the live queries in a very short while. Let me just take a few queries that we've gotten on Twitter first, though. The first one is from Abhik Mitra, and this one is on Motherson Sumi and Jubilant Foodworks for the next 6 months to 1 year. So since it's a short-term query, I'm going to go across to Kunal. These two counters, Jubilant Foodworks in particular, a lot of people would say, at least on the fundamentals, would be very interesting, because if you have localized lockdowns, I think people will eat pizza more often than not, right?
Absolutely, Alex. So it's absolutely perfect to try and analyze it in that regards. But when you look at the charts, I think Jubilant Foodwork has been one of the, I would say, rock solid charts in the last 1 year. It managed to wither a lot of the volatility which the markets had offered over the last 12-13 months. So yes, the stock also went through a sharp correction, but then it managed to recover and make a new high for itself. Was among the first mid cap or tied to large cap names to try and do that. I think at current levels of 2,900, it's a good buy on dips kind of an opportunity. And if the stock provides any kind of a correction, I think 100, 200 rupees odd comes back to 2,700 levels. That's a good level to try and enter Jubilant Food.
Right, we have a next query coming in from Sumant, and that one's also a Twitter query saying that should I buy Biocon at current market price? Kunal, what's your take on Biocon? Worth buying at current market price?
Not really, Cheryl. I believe that Biocon, I think, has been one stock which has been looking a bit more weak on the charts. We were discussing this, I think, a couple of weeks back as well, that how that the gap down which was created for Biocon, I think approximately 2 months back or 3 months back in the month of January somewhere, that has left to a sharp gash towards the stock. It's been unable to break past about that 430, 440 range or 445 range on the upside, if I'm not wrong. So I think till the time the stock is unable to break past about those levels, it's more of a time-wise correction as well as a price-wise correction which the stock has seen. So rather than looking at buying on dips, it's much more prudent to try and buy the stocks when it actually goes through a trend reversal. As of now, there are no signs of trend reversals for Biocon.
Okay, now I do want to point out, gentlemen, that the queries are absolutely flooding in, so I request you to keep your answers as short as possible. I'm going to start with the YouTube questions now. We've got a question from Krishna on JK paper, bought at levels of 109 per share, and he's got a long-term horizon for this. He's asking you, Ashish, what would you say in terms of fundamentals? Should he hold on to his investment?
See, in my view, again, problem is that the paper stock is, first of all, again, the lockdown is coming, across the country. So this was the earlier reason when the stock went up of paper stock, that lockdown was eased. So there was good demand of paper. But again, demand is coming down. So my suggestion will be to exit from JK paper. Instead of this, if you want to be in commodity play, then look at sugar stocks, which can give very good returns compared to JK paper. So paper is avoid from my side, and sugar sector looks good.
All right, the next query is coming from Shanmuga Sundaram saying that he's bought 50 shares of Amara Raja batteries at 840 rupees per share. He wants to know the prospects in light of the EV battery manufacturing as well. What's your take on this particular counter, Ashish?
See, again, all battery companies have really done well over a period of time. But again, we have seen Amara Raja battery has started coming down from 1,000 levels to current levels. So this slightly underperformer. So I'll advise to exit from Amara Raja battery also. And I suggest another stock which you may accumulate and you can get better returns is Polyplex Limited. This is a company where stake sale by promoter is going to happen in coming months, and you can see very good valuation at which price they are going to exit. So you'll make more money by investing in Polyplex.
Coming to you on this one, Kunal, this is a futures trade. We've got Kijar who's bought M&M make call option, 780 call option. Which one? So would you advise him to hold on or exit?
I would advise him to exit. I think the stock is, even on a day like today, or in fact last week as well, when the markets bounced back, the stock did not see some decent bounce, and today I think has managed to break back below its major support level of 750. So I think if the stock closes below 750, say for 1 or 2 days, then I believe it could be sign for more correction to come into M&M. So it doesn't make sense to hold on to option price because they play a bit more tricky when you see a downward trend on immediate basis. Option prices, they go through a very sharp kind of a correction. So I would suggest an exit on M&M call option, which you have at 780 strike.
All right. Our next query is coming in from Shubh Mathur. He wants to enter the chemicals and fertilizer space. He's identified a few stocks as leaders, that is Navin Fluorine, Deepak Nitrate, as well as PI Industries. But he wants to know whether he should look beyond them, and if not, when can he actually enter this particular space? Ashish, what's your take on chemicals and fertilizer space? And like Shubh has also said, he's identified a few leaders. Should he look beyond them, and should he enter this particular counter?
Yeah, in fact, all three stocks are blue chip stocks in my view, and the way prices are going up in chemical space and fluorine particularly space and coolant space, all they will continue to do well. This quarter, you are going to see a bumper results from all these companies, but at the same time, only thing we need to account for is as stock have moved up quite a bit, so that kind of returns which you might have got if you could have invested 3 months back, you are not going to get. So look at some new stocks in my view. Look at Jayant Agro Organics. This is 190 rupees a stock. Look at Bodal Chemical and Tata Chemical. If you ask me, these three stocks can give you even very good returns once these quarterly numbers are out.
Ashish, coming back to you on this one, Anjali's bought shares of IOC at an average price of 100 rupees, and she's accumulated this over a period of 2 years. She's very clear that she does not want to sell, and I think apart from the dividend income that she's gotten from this stock, she hasn't really made any money. But she's asking, should she nibble into this counter right now? At what price does it look attractive?
See, IOC, I'm very bearish, unfortunately. So I'll not give very positive view about this because again, in oil marketing companies except BPCL, none of other companies have given good return. So if you want to remain in this particular sector, ONGC can give you even better return compared to IOC. So my suggestion will be to come out of IOC and look at ONGC, which is better bet.
Right, we have a query. We have actually two queries coming in on Tata Motors. I club both of them and come to you, Kunal, on that. One is from Seems Kumari saying that she's bought 300 shares of Tata Motors at 320 rupees per share. Wants to know what's the outlook of the stock in the near to mid term. And the next one is from Radesh. He's saying, should he buy Tata Motors now or should he wait till it goes down to around 270 levels?
See, I think the answer to that is very, very simple according to me, because after 4 straight quarters of uptrend, when the stock was almost at 60-65 rupees and stock managing to jump up to 350 rupees, it's bound to be that for a couple of quarters the stock may remain a bit more volatile, it may remain sideways, it may try and be more choppy. So if you can try and use that choppiness and try and average it out further for guys who have investments at higher levels, and specifically for someone who's looking to enter, you should start entering at the current market price and look to add on significant dips. I think that's a better strategy for a stock like Tata Motors, because after 4 straight quarters of uptrend, I believe that it signals that this stock is ready for a multi-year uptrend for itself. So you may have a couple of quarters where the stock may go through a correction, but that should be taken as a good averaging opportunity.
Okay, we've got a question coming in from Danny Varghese, and he's holding HDFC AMC at levels of 2,820. He says, according to him, the results were okay, but he sees the market share going down. Ashish, There are some that question investing in an AMC in the first place. And while I don't know what your view is on the space, how do you look at HDFC AMC as a counter?
Yeah, actually, valuations are quite rich of HDFC, AMC, and the kind of growth we have seen in past may not continue going forward because some of the top key people have left and joined some other AMC. So, effect is of that particular shift also. So, my suggestion will be to come out of HDFC, AMC as such. And though AMC business is good and consistent business, but in my view, instead of just look at CDSL, the kind of growth stories there, this will give you better return. Even India Energy Exchange is another stock, which is also multi-bagger kind of a category. So if you want to remain in this segment, CDSL and IEX are better bet.
All right, our next queries come from Abhi. He's saying that he's holding Prestige Estates, 200 shares of it, which he bought 4 months ago at 291 rupees per share. He wants to know what's the short-term view coming in for this particular counter. Kunal, what's your take on Prestige Estates? Definitely the real estate sector, beaten down sector, is seeing a comeback, but how is the charts looking for Prestige Estates over the short term?
Well, I think over the short term, it's a bit, I would say a bit negative because the stock is finally challenging its major support at this 270 level. So if you look at the charts from January 2021, that's almost 4-5 months back, the stock, was multiply or continuously testing this 270 support zone. I think today is confirmed a breach below this support zone. So it's confirming some sort of a short-term breakdown. I would suggest, that if you're looking to accumulate and assuming if you're looking to hold on to it from a longer term perspective and want to convert your short term holdings to long term, then I would suggest that look to average further if the stock comes back to 240 level. So I think there could be an immediate correction of at least a 30 to 35 rupees on the stock price in the very short term.
Okay, coming back to you on this one, Kunal, this is Siaram Silk Mills that we're talking about. We've got Nino, who is bought at levels of 160. The stock is currently trading over 200. So, and in fact, it's got quite the pop in today's session as well. What, according to you, is a good exit level?
So I think if it's very, very near term, then I would suggest 220 to 25 as a good exit level for Siaram Silk. The stock has a tendency of coming very close to its previous lifetime highs or swing highs, and then the rally abating, and then the stock coming back into a corrective phase. Previous high was approximately 225 to 30 for Siaram Silk. So I think in that aspect, you should be looking out to book profits closer to 225 range.
Next query is coming from Sri Charan, saying that he wants to buy Sundaram Fasteners at current levels with a 3-month horizon that he's looking at. Kunal, how does this particular counter look? Make sense to buy at current levels? Sundaram Fasteners, that is.
Yeah, I think it's been a fantastic stock. I remember, tracking this stock quite closely many years back. It has done wonderfully well. It's more of a trending, classic trending natured, stock price. So it goes into very strong periods of uptrend, and then those typical periods of consolidation where the stock remains sideways. So I think it's a good portfolio stock as such, provided you have a much higher time horizon. So a 3 months would be a very short-term time horizon for a stock like Sundaram Fasteners. I would suggest that you should look at it from more of a longer-term view and then hold on to it as a strong portfolio stock.
This is documented. In fact, the aviation companies went through quite the torrid time in the year 2020, and in fact, over the last month and a half, 2 months also, you've seen load factors absolutely plunge. We've got a question from Ijaz on SpiceJet for the long term. Assuming that you have this secular story for aviation in India that is intact, once you go through this turbulence, would you say that now is a good time to buy and to accumulate?
Okay, so my suggestion is not to invest still in aviation stocks because we are still not sure how long this phase will continue because of COVID. So many restrictions are there. So I like to buy this stock once it reaches around 45 rupees SpiceJet because 52-week low is around 38. and high is almost 100 plus. So we'll get to buy the stock even at lower rates in coming time. But at the same time, even Indigo, though, is not falling that, showing a lot of strength. But sector is totally avoid at this point of time.
Avoid is the call coming in for the aviation sector. The next query is coming from Indu. She's saying holding Z Entertainment 500 shares at 205 rupees per share. She wants to know what's the short-term view on this particular counter. What's your view on Z Entertainment, Ashish? See, this is again a very underperformer kind of a stock. If we see stock is moving in range of around 50-60 rupees for quite some time and not going anywhere. Even result side, not too much improvement is there. So instead of this, I'll recommend few other stocks which can give better returns. So look at stocks like JBM Auto, which is a pure EV bus related story and can give very good returns if you can remain invested for next 1 year. Or stock like JSW Special Ispat Limited can give you very good returns if you can remain in and this is stock for 6 months. So Z is a avoid from my side.
Okay, I'm not really sure if this is actually Balan. So if you have 200 shares of Infi, TCS, Mindtree and Reliance, then you have quite the portfolio. So really the question, Ashish, is that Balan is asking whether he should sell shares of the companies that I mentioned and buy an equivalent of Happiest Minds. Is that something that you would do?
Depends actually, because the stocks which you are holding is a blue chip stocks, and you the Happiest Mind is a mid cap kind of a stock that you want to own. But surely Happiest Mind will give you better return, but it's a high risk, high return kind of profile because your current stock holding is not having that high risk element with this. So my suggestion will be you can partly liquidate Infosys and TCS and shift into Happiest Mind. The rest, I think you can remain invested as a good portfolio.
All right, taking a detour from our YouTube queries to the Facebook query that we received from AK saying that's bought Vedanta at 150 rupees per share. He wants to know if there's any chance of this particular counter going up to 400 rupees per share in the next 1 year. What's your take on this particular counter, Kunal? Any scope of it rising to 400 levels in the next 1 year, Vedanta?
Well, very difficult to say that whether this will happen in 1 year, but the metal stocks have gone through a completely different tizzy altogether. This seems to be more of a long-term trend for metal names. Looking at the strength on many of these stocks, how many of these stocks have gone through their 10-year, 12-year breakouts, for example, large cap names like Tata Steel, JSW Steel, etc. It seems to be that even Vedanta would probably come back to at least hit back its major highs. I think if I'm not wrong, the 10-year high or the 6-year high for Vedanta was approximately 350, 360 levels. So I would sense that possibly over the next 1-2 years, the stock can at least retest that 350, 360 mark.
Okay, I'm going to come across to you, Ashish, on this one. We've got multiple viewers. We've got Rajan, we've got someone else also. We've got Manjunath, who's bought HDFC Life. Rather, Rajan wants to know whether to buy at this point. Would you say that this is a stock that you accumulate over a period of time and you hold for a sizable time frame?
Yes, I agree. This life insurance stocks are typically long-term holding, and they are having a very good business model where growth in new premium as well as repeat premium is ongoing. So HDFC, again, the market leader in this space, will continue to do well. Also, at the same time, I'll also recommend Bajaj Fin, even at this price, because they are having both mix of life and non-life with them, and the kind of growth and the numbers which came in the last quarter. This is again a stock which can give you around 20-25% kind of return. So HDFC Life and Bajaj Fin both looks good.
All right, our next query is actually coming in on Vector Foods, and this is from Ritesh Sharma saying he's bought 28 shares of Vector Foods at Mrs. Vector's, that is, at 600 rupees per share. Wants to know whether continue to hold or should go ahead and book a loss. What's your take on this particular counter, Kunal? Yes, it's a recent listing, but will you be able to help Ritesh on it?
So I think whatever the history of the stock price has shown, it's not encouraging. As the stock is still under a bit of a downtrend, but there's just one I would say positive factor which has emerged in last 2 days for Vector Foods. So price wise it's in a downtrend, but some of the indicators like what we track, MACD has come back into positive for the first time I think in the last 2 months for the stock price. So that could probably mean that there may be a relief rally into the stock price. So if you've bought at higher levels, and if you're looking to average and specifically looking at it from a short term, I would suggest that averaging at current levels for a pop or for a trading pop of at least 15-20 rupees could be a good short term strategy.
Okay, I'm going to slip in one last query if we possibly can. I'm coming to you, Ashish, on this one. Parag Milk Foods, very short answer. Would you buy for the long term? Abhishek wants to know.
No, I'll not like to buy a very underperformer kind of a stock. Instead of this, you buy Steel Authority of India, you are surely going to get 50% kind of upside in next 1 year. So no point in buying Parag.
Mahindra. Come to an end of our query segment. Thank you, Kunal, and as well as Ashish for answering all the viewer queries, giving your idea on Reliance Industries as well as sharing your high risk and low risk ideas. So that is the end of the query segment. But for all of our viewers, see you tomorrow at 11:15 a.m. on all the social media channels where we will be live and we will be taking your queries. All right, let's take a shift now and let's talk about earnings. And Mahindra Logistics had come out with this Q4 earnings. We're joined by the management, that is the CEO of Mahindra Logistics, Ram Praveen Swaminathan, to take us through the earnings and talk to us about the way going ahead. Good morning, Mr. Swaminathan. Thank you for joining us on ET Now. Let's talk about your earnings. And the company saw very strong revenue growth of about 20% in the quarter gone by. What are the factors that actually led to this particular performance coming in for the revenue, as well as do you expect this growth in your revenues to continue going ahead as well?
Yeah, so revenue was up 20% as a company, driven mostly by growth in our supply chain businesses, which grew by 28% year on year. What's been driving that is three factors: recovery in the auto segment, continued strength in the farm sector, and our continued expansion in e-commerce and consumer. We hope to continue to see this trend line over the rest of this year as well, though there will be some short-term challenges because of the COVID-19 pandemic.
We've seen the surge in the COVID-19 cases very different to considering what has happened the last year around. So given that the second wave of COVID-19 is here, it's hit the tier 2 as well as 3 cities. Could you see that have an impact on your auto as well as farm sectors, which you mentioned actually have supported the earnings in Q4?
Yes, I think one should expect some level of impact. Now, early signals are still mixed, so we can't say that there's a clear trend. But given comparing versus last year, I would say one would expect some impact this year.
Mr. Swaminathan, Alex here. While on a year-on-year basis, we're seeing a strong growth in the supply chain management business, sequentially it's lower on account of the impact of localized lockdowns. Has the impact worsened in the first quarter that we're seeing right now on account of the rise in cases that started in February?
Yeah, so Q4 was lower than Q3. It's a normal seasonal impact which we see every year, given the festive season in Q3 is always a big peak for us. In April, we have definitely seen a slowdown given lockdowns across Maharashtra and several other regions slowly happening. There are clear reductions in volume, both in our warehousing and value-added service operations, as well as in our transportation-based solutions.
Now, the enterprise mobility segment has seen a decline for the second quarter in a row, Mr. Swaminathan. Will this segment continue to be an underperformer, and will it continue to be under pressure on account of the COVID-19 pandemic?
So the mobility segment has been in some ways the worst and most impacted by the pandemic because most companies have not really unraveled their work from home policies. So we see very direct impact of that in this business. What we have maintained is that it will be another 3 to 4 quarters before we see consistent recovery back. That said, our long-term view on mobility and shared mobility still remains very positive. And we continue to invest in areas like electrification, technology, and new service launches, for that market.
Given that the e-commerce is actually increasing as a way of preferred way of shopping for a lot of customers, what is the company's plan to actually capture this opportunity in the e-commerce segment, also in consumer as well as the farmer?
So I think on the e-commerce space, we have strong customer partnerships there, and we provide a range of full solutions, line haul, fulfillment centers, sort centers, integrated last mile delivery, right? So it's a complete bouquet of services. We have been very focused on deepening our partnerships with our large marketplace customers and also expanding to new categories such as groceries. So we do continue to expect, very strong long-term growth in this space, given both our penetration and the continuing shift towards digital. We're also working on the consumer space, in terms of brands and logos which are increasingly going D2C. That's a clear shift which you can see post the pandemic of many companies going direct to customer. And we are working with several customers on expanding that as well. So that's a repivot which we've been working on for a couple of years now, even before the pandemic, and we expect to continue to accelerate that in the coming quarters.
Let's talk about EDEL, that is the electric last mile delivery solution. How is the traction that you're seeing over there after its launch in Q3?
So I think response has been very positive. We had said when we launched that we expect to be at around a fleet of around 1,000 vehicles within the first 12 months. We are 1 quarter in and we're already up to around 300 vehicles. So I think adoption interest has been very high. It's not just been from e-commerce companies, but it's been from last mile delivery across the board. What I think is really positive is that in many cases, we have been able to show that electric vehicle-based last mile delivery services are as cost effective as ICE. And therefore, sustainability does not need a premium. So the underlying trend has been very positive. We continue to believe that last mile cargo is a huge opportunity for electric vehicle-based solutions, and we are on plan to on our ramp up.
Right, Mr. Swaminathan, could you also give us an idea of how the order book looks, or the order pipeline looks at this moment? Can you give us an overview?
Yeah, so we continue to work both in terms of expanding our services portfolio and driving more integrated solutions. So as you know, earlier this quarter, in Q4, we announced our long-term strategic partnership with Bajaj Electricals, which provides integrated end-to-end solutions for their entire supply chain. We are working on similar models with other customers as well. Obviously, at the right time, we will make announcements on those accounts. But we continue to see the expansion in our client base and addition in our client list.
Thank you, Mr. Swaminathan, for taking the time, for speaking to ET Now. Wish you all the best for the year to come. On that note, we're taking a short break. More on the other side, so do stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And Warren Buffett has faced much flack for actually past selling his stake in Apple. Though the stock actually remains a top performer in his portfolio, Warren Buffett was candid enough to actually accept that selling Apple was probably a mistake. But he also showered praises on Tim Cook for running the company most efficiently. Listen in.
It's an extraordinarily Apple. It's got a fantastic manager. Tim Cook was underappreciated for a while. He's one of the best managers in the world. And I've seen a lot of managers, and he's got a product that people absolutely love. And there's an installed base of people, and they get satisfaction rates of 99%. And I get the figures from the Furniture Mart as to what's being sold. And if people come in and they want an Android phone, they want an Android phone. If they want Apple, they want an Apple phone. You can't sell them the other one. I mean, the brand and the product is it's an incredible product. It's a huge bargain to people. I mean, the part it plays in their lives is huge. I use it as a phone, but I'm probably the only guy in the country. You know, maybe some descendant of Alexander Graham Bell's doing the same thing, but it is indispensable to people. And, you know, it costs, you know, car costs $35,000. And I'm sure with some people, if you asked them whether they wanted to had to give up their Apple or give up their car, you know, and really make the choice for the next 5 years, you know, who knows what they do. But and we got a chance to buy it. And I sold some stock last year, although our shareholders still had their percentage interest go up because we repurchased shares. But that was probably a mistake. In fact, Charlie, in his usual low-key way, let me know that you thought it was a mistake too, didn't you, Charlie?
Yes.
Yeah.
Well, we've seen quite a bit of selling pressure in the equity markets through April, but there were a few bright spots. How is the month of May going to pan out though? Is it going to be a sell in May and go away kind of month? Here's Jayesh Khilnani with a special report.
There has been a clear divergence between the frontline as well as the broader market indices during the last 5 years in the month of May, because the Nifty as well as the Nifty Bank have gained more than 1% each during the last 5 years on an average, while the small and the mid-cap indices have lost about 2% each during the last 5 years. Moving on to the sector gainers, watch out for the Nifty FMCG and Financial Services Index, because both of them have gained more than 2.5% on an average basis, followed by the Nifty Infra as well as the Auto Index, which have gained about 1.8% apiece. What has not done well has been the Nifty Pharma Index. That has declined more than 5.5% in the last 5 years on an average basis during the month of May, followed by the Nifty Metal as well as the Media Index, which have declined more than 2% each, and the Nifty PSU Bank Index has also declined more than 1% on an average. Moving on to the stock gainers, not many stocks to talk about here, but you have Emphasis, which has risen about double digit, while you have Vinati Organics, GCPL as well as Info Edge, which have also managed to gain about 6 to 9% each. On the flip side, there are a lot of PSU banking names which stand out as far as losers are concerned, starting off with PNB, IOB, along with IDBI Bank as well, which have declined about 7 to 11% each. And then you have Ipca Laboratories, which has also declined about 10%. Hindustan Zinc and Steel Authority of India from the metals pack, which have declined about 7% each in the last 5 years during May on an average basis.
All right, thank you, Jayesh, for that ET Now insight. And with that, we are out of time on this edition of Buy Now, Sell Now from Alex and myself. Thank you for watching.